the weekly appearance of Ivy Rose. Isn't she not cute as can be? Let me just say, she's going to be 6 months old next week. And look at how big she got from when she was. She'll be 25 pounds when she's through. All right, everyone. Today is Thursday. We're at the 20th of October 2022, about 6:45 p.m. Central Time. So, interesting stock market. The earnings not as stellar as they were. You're starting to hear more and more failures. Snap down today, a big one, carrying the market afterwards, down 25%. Airlines still doing very well. Get Verizon, a number of others tomorrow. But my point isn't that I don't want to talk earnings right here. It's what the stock market did on that rally, getting up as high as it did. And in many of the cases, we hit Bollinger Band tops and we have gone to sleep. That is so important to understand. The next step is you're in a transition. It's happening right now. We are moving from thinking about earnings as to what the heck is this going to mean for the next round of the rate hikes that the Fed is going to do. The market is already discounted mentally, a 75 basis point hike. So you're getting traders already talking about December. You can't talk about December until you get a better handle on exactly what you're going to have in the way of CPI numbers and jobs. Speaking of jobs, Mr. Musk said today that he is going to fire 75% of the Twitter staff when he takes the company over. He's got 7,500 employees there. I'd be running for the hills. What he's going to do, why he's doing it, I don't know. He's not spending $44 billion to kill the company. You can count on that. So he's got something in his mind, whatever it is, but that's going to impact other things. And, I keep watching the jobs market for what it is. The good news is holiday hiring's going on, and, the fairs are taking place, and everybody wants to hire for the holidays. The bad news is the spending is going to be down for the holidays, so I'd be a bit careful with that. Just want to show you here, we're going to talk pivot points in a minute, so you might want to get ready for what I'm going to do there. All right, let's come back. They're important because in this market where you get the quiet action, you get the opportunities with them. Okay, so here we are in the S&P 500 index, and you've laid down at the 3,600 level, the old break low zone, and the market's pausing on you. Is it going to give you another leg to the downside from here, or is it going to try to give you a bit of a rally that you can work from later? That's what I don't know. If this is it and it lays down, the end of the year rally could be even better than I thought. And I'm still looking for the end of the year rally. And yes, I know that we've had a nice rally here. And when I did my special report 3 weeks ago, it's very well fit into everything that report was doing. So the timing of those events were very good, and they played themselves out. When I look at the sideways action, can you deny in any manner that you've left this and now you're just going sideways? So is it a top or a bottom is going to be the big question. When we take a look at the day-to-day action, we have higher lows, higher highs. That's bullish. The market is, though, stuck, and it ran up to the 18-day average. If you take my charting course, what do I teach you? Markets that eventually correct like to go to the 18-day average. I call it the line in the sand, and they fight for the new direction. I am not surprised on this at all. This is where that battle is taking place. If the market moves one way or the other, I predict that the problem will be the upper band or the lower band. I already know my parameters. I can see what neutrality is, and I wait to see which way the market's going to give me an edge. Even momentum has gone slow. You haven't gone anywhere. The next market is the mini-micro NASDAQ. It rallied back to the 18-day average and ran and stopped. Okay, everything from the lower Bollinger Bands. I can come back here to this chart. Lower Bollinger Bands. That's why Bollinger Bands are so important. The gravy came out of the market after it got back to the 18-day average, got there, and it stopped. And if you're a trader and you understand this, you move your focus to other places. The easy play is over. And now you get a reactionary market that is doing this. What's the next big move going to make? Well, When you bounced because you're under the 18-day average, your bias is down. It's just a bounce. It's not a resumption of the downtrend yet. It's a pause. We have to see which way the market wants to ultimately go. The strongest was the Dow. It not only stopped down there, it fought a battle for 3 days at the 18-day average, and then decided to go to the upper band. So you've gone from lower to upper band, and now you're breaking back, probably going to get to that 18-day average to figure out what the next step is. So is this the place to be right now? It is not. The other strong market did the same thing, almost missed it. Just missed hitting that lower band right there. But it certainly got up all the way that I thought it would get up here, and that's where the market ran out of some of the momentum. Okay, neutral still because you're right at the 18-day average of closes. The interesting one that I'm not getting a handle from is the VIX. The VIX broke down today under 30.42, reestablishing a downtrend. Normally, if you drop in the VIX, you're rallying in the stock market. Interesting. Are you buying protection or not? They're not buying protection. Okay. I predict, I'll stick my neck out here. If you hit 28.50, the lower band, the pros will come in and write puts, saying you're not going to go down very far and you'll come back to the 18-day average, and that's where they'll try to cover those. It's a strategy that I talk about all the time here. In the bond market, you're embedded. Embedded means until it loses that red line over 20, given rallies in the market, the pros are going to keep selling it, and it just keeps humming to the downside. You haven't yet embedded in the 5 or the 10-year. You're working on it. You can get it done right away here, and if it does, I look for even lower prices in those. The dollar index reminds me of stock indices. The market, first off, doesn't want to run to the upper and lower band, which is different than those, but it is stuck at the 18-day average. The trend itself, this part, when the market was in the narrow Bollinger Band and exploded to the upside, is over. So when people say the strength of the dollar has gone sideways. It isn't super strong. It's held on to most of the strength, but it's not making new highs at this point. And if the dollar's not going anywhere, you're probably not going anywhere in the eurocurrency, and that's exactly the case. Look at the sideways action. Now, the British pound. You would think losing a prime minister in 44 days would break the market. It didn't, because they thought she wasn't capable. Her plans were that of, like I said, President Erdogan. She's going to cut taxes on the rich. She's going to spend money she doesn't have. She's going to lower income for all. She's going to give everybody money for their energy bills. Where does this all come from? These are called dreams, craziness. And the craziness led to the shortest prime ministership of all. People she put in were her friends. Market knew it. That didn't last. Now you got, I think, 6, 7 new candidates. And believe it or not, Boris Johnson is back in play. He and President Trump, they come back from the dead. Okay? And I make you a prediction here. If Mr. Johnson, if he is elected prime minister, can you imagine what President Trump is going to do, say, and how invigorated he's going to get? Can just imagine that. Like it or not, I'm not talking whether you like the man or not. Again, that would be the catalyst, something to think about. In Bitcoin, I'm still have market action here that I would tell you to avoid like the plague. Look at how that market's just stuck in that narrowness. And when it happens, remember what I teach you, the volatility comes out of the market and you're trying to catch moves that they don't have traction. You got to be very careful of that. Differential between Brent and WTI slipping a little bit. The market is digesting the craziness that President Biden came out with the $70 floor in oil. And as I said, I have my own doubts that any of the big oil companies are going to join in with him. It's going to be his second event, like when he ran to Saudi Arabia for help, and that didn't happen. And now he's running to big oil for help. And he's the one that hurt them. He's the one that stopped the production in America of what they were doing. He's the one that stopped the Keystone Pipeline, okay? Let's hang it where it belongs. And now he wants their help to replenish and produce more oil. From them, he won't get it. He'll get it from the mom and pop producers in America. This is their go-ahead to do it. This is their thing. They can go to a banker. I know I can get $70 for my oil. Help me out with that. And they don't have stockholders. So they're not worried about stock buybacks and the like. And a lot of our oil comes from that level of oil producers, a real lot of it. Okay. But you are caught temporarily between the 200-day average in gray and the 18. In order for the market to start picking up, you got to start clearing this number. Then you can open the door up for higher prices. There's a but. Close under the 18-day average of closes, and you have lower highs, you already have lower lows, it'll trigger potentially a selling wave in the market. What about in WTI? Same thing. And notice how it's flirting with that. So those are the things I look at least as I'm looking at the chart. In the heating oil market, interesting, I just got my natural gas bill today. And we're only at October 20th, and I believe I've turned the heat on maybe for 2 weeks, not every day. Again, I live in the Midwest. We're 30 the other morning. You got to have your heat on. I mean, there's no getting away from it. The highs of the past 3 days have been 45, 50 degrees, so you're running it. So I got the first part of it. It went up a third from when I wasn't using it already, okay? So I have a feeling I'm in for a bad time. In any case, you've got a higher high, lower low, and you're very stable right here. This is where you should fall to, the 18 and the 100-day average, waiting to get an event that's going to carry the market. Now, in natural gas, it continues to crash. The weather forecast for the next 10, 12 days is still mild for this. So each day that goes by, you're not using up any of the BTUs. And that is a real problem for this market. It keeps building. Now, you've got 4 days in a row under the lower Bollinger Band. You're probably going to embed here. I would say you get a rally, short covering rallies. The pros aren't through hitting this market on the downside. I'm Ira Epstein. I want to remind you about one thing, and we keep talking about it. Pivot points, Bollinger Bands, ideas on trading. And if you take a look and you work with our Pivot Point series, I think you'll fall in love with it. I put together how I teach my other courses. I did this one for free. So you're going to learn how to use pivot points along with momentum as I teach it in my slow stochastics. And from there, you're seeing the buy and sell points. It's for in and out trading. It is not a position trading tool. It is, I think, a great tool to hone in during the day, your entry point for trades you might want to hold on to longer term and the like. That's how I use it, very frankly. I don't use it for the day trading part, but I do use it that, gee, I want to get long or short at a number and look at the pivot point. Am I holding out too long? Maybe I start building a position or telling my clients to build a position, okay? You can, and by the way, I look at it when I'm looking at my stock account, all the other things. Why not? That's the way you look at it. I'm Ira Epstein. To get this for free, just go to our website at iraepstein.com under the free offer area, or just come up here with your finger, give it a click away, and away you'll go. That you'll see the icon, click it, and sign up. I'm Ira. Take care.